Thank you for inviting us to this very exciting panel of entrepreneurs and venture capitals to come and tell their story about the private side of the story. So we have heard the public financing, and this session now is going to concentrate on the first-hand experience of these entrepreneurs and investors regarding the improvement potential and best and worst practices in the blockchain and AI space when it comes to both developing a business and developing the ecosystem and the investment community around it.
So actually everything started more or less 3 years ago when the European Commission and the European investment funds decided to bring together the effort in putting for the first time a first investment funds, a pilot on artificial intelligence and blockchain. And I'm not going to mention the numbers, has been deeply discussed previously, but if you can refer also on our website, you can see all the references and also all the private ventures that have been funded by this pilot. And we are more than happy to have two representatives in the session of today, so I will not say a lot about this, but what is important is that our initiatives came really as supporting actions to the pilot investment funds to try to really reduce the biggest gap that has been identified, which was really a knowledge gap. The fact that everyone or a lot of actors, both for the private but also for the public side, were really active already in the artificial intelligence and blockchain investment, having some national initiatives or maybe also cross countries initiatives. And the idea of the DT2Invest was really to talk to all these peoples. We have run surveys in the previous years. We have done a lot of market consultations, and what we have done is also kind of a mapping of all the investment and public supporting and private initiatives that several countries have developed in the last years. You will find everything on our website, so if you want to go back on some country analysis on the different member states, but also on some specific learning materials that we are going to develop with also some key players and key experts from all over Europe, which will be ready in the next months. And last but not least, and the session of today is really the well representation of what we try to achieve with DT2Invest, is really to reduce the gap and to increase the awareness on the ecosystem. And we have identified the larger group of investors that have already working in the artificial intelligence and blockchain. And we are going also to identify a portfolio of companies, 100 from blockchain, 100 from artificial intelligence, which will going to be push and will be proposed also for investment to the European venture capitalist partner.
I think I'd like to kick off this session with starting with Sarah Dianek, because I think it's very interesting to hear from a young entrepreneur in this space, but still have done a bit of a journey already with her company, about her story, what kind of experience you had when you developed that, and what do you see as the ecosystem challenges of development of a blockchain company?
Hi, everyone. So yes, I jumped into this ecosystem 5 years ago. At this time, I was working at a digital marketing company, and I identified some use cases to have the opportunity to create mutual customer engagement program thanks to the blockchain. I met at this time my co-founder, and I started to be really active in the blockchain ecosystem, went to various conferences and so on. And we had at this time a lot of support from the ecosystem, as it was one of the first and maybe the first use case of rewards onto a blockchain. So we created a team of engineers, developers, specialized in blockchain technology in France. And we launched Sandblock, which was the first protocol that we launched on the Ethereum blockchain. After that, we restructured everything, and we decided to have our own blockchain based on the Cosmos SDK and have an independent use case. The reason why we did that, and it's linked to your question, Hélène, is that we had a lot of difficulties to raise funds for crypto-based, token-based structure. And we had also difficulties to make retailers and corporates using this open source protocol. So we decided to let this open source protocol on its own as an independent structure. And we created another structure called Surprise, which was capital-based, which is a use case using the protocol with an independent team and a capital-based structure. So we restarted this story to have the ability to enter into the investment grid that was understandable at this time. And it was actually a good decision because it led us to made an exit of Surprise at the beginning of the year to one of the leading group in customer reviews and engagement, which is interested to use the protocol we developed for all the reviews they are storing to insert trust and transparency, and also to create a new reward system for people who give their review, give their feedback, and create value. So I try to put everything in a nutshell, but the key takeaway that I can tell right now is that what I saw in this evolution, because those last 5 years were really evolving fast in the blockchain industry, is that we went from a point where the blockchain crypto space was really on its own with a specific and dedicated ecosystem to a bridge where now we have one big group, actually one of the 40 most promising startups in France that make an acquisition of a blockchain specialized startup.
That's super interesting. Thank you so much, Sarah. I think that's a great backdrop and start to how a company can develop. I think we should go back and ask some more questions what you think about that type of development for other companies as well. What would be the things we can do to help other companies develop in the way you've done and being able to pivot and change their business model into a market fit. But perhaps first we'd like to hear also from Harry Behrens, and it's your company is Bloxmove. I hope I'm pronouncing it right now. Otherwise, you will correct me, Harry. And tell me how I understand your company is active in the mobility services space, like mobility as a service, and how blockchain is applied to that. And I think that's a very important vertical that is developing right now. I mean, we've seen from financial services, blockchain technology being applied into more and more sectors, and definitely mobility, energy are sectors that have huge potential. Very interesting to hear what you have done with your company, and same for you, how you see the ecosystem developing around that vertical.
So thank you. So the sectors are actually, and that's the name of the company behind Bloxmove. So the company is called Power and Mobility, and that's for a reason, because that's the two sectors we are addressing: mobility, urban mobility, but also something called sector coupling, which in a nutshell goes towards using electric vehicles to balance spikes in the generation of renewable energies. So from a background, we come out of a big corporation. So I founded and used to lead the Daimler Mobility Blockchain Factory. Daimler Mobility used to be called Daimler Financial Services. So it's the service arm in the Daimler Group. And in there, based on the strategic analysis of where is the automotive, where is the mobility sector going, we developed what was going on at the time under the name of Daimler Mobility Blockchain Platform. And from the very beginning, we made sure of one thing: we didn't develop it in the usual kind of corporate, quote unquote, way, where you go to the Accentures, to the IBMs, or to the ThoughtWorks of the world and ask them to develop something for you, but rather we teamed up with a number of very well-positioned startups in Germany, Evan Network, Riddle & Code, they're Austrian actually, Helix. So each one of them being very focused on specific capabilities in that area of digital identities and blockchain. And we developed this in a more or less loosely coupled network collaborative manner. And then it gets to a similar kind of setup from a result where now we are in equity, but we're also a protocol, so a token story. We basically managed to do a spin-off in the form of a management buyout. So within Daimler, this was now, we stopped it and we said, all right, let's take the best out of it. Let's take this outside of a big corporation. We are in a decentralized ecosystem. We're in a decentralized market. Our customers will be structured in, it used to be called peer-to-peer. You can think of it as federation, but the setup is very, very different from how traditional corporates tend to function, think, and manage things. So let's take this outside. There's big investor buy-in into this technology, which is what we found out is indeed the case. We went into one of the best acceleration programs in Europe when it comes to decentralized technologies, namely Outlier Ventures. Full disclosure, I hold no shares, so I can plug them shamelessly. I get no benefit out of it. But they really taught us a new way of approaching the market. And through that help and through what we're doing now, and through the partnerships, we have partnerships now with 6, 7, 8, I think we're at 8 corporations, we managed to actually fund ourselves very rapidly. So we managed to get within the space of less than 3 months, $3 million worth of funding. But I have to say, we did it the untraditional way. So we didn't go the traditional ways. We went slightly different. And the result is that indeed now we are well funded. And that is where we stand right now. In a result, and I heard that earlier also, there is now 2 organizations in this world. One is a totally independent, orphaned, more or less you can call it a foundation. Legally speaking, it's called the CLG, and that speaks to also what we heard earlier. We needed to, out of so many reasons, we needed to put that into Singapore, which manages the protocol and the token side of things. And then there's a corporation, Power and Mobility, which for the time being is in Europe. It's established in Ireland. It's a Power and Mobility Limited out of Ireland with a German subsidiary. So that's the overall structure. And that is essentially where we stand with regards to funding and also from the background where we come from.
Thanks so much, Harry. I mean, this is it's really, really interesting to see how important it is with partnerships that you mentioned, not only in the mobility sector as well as with investors, and that you together can find a model that works for increasing your revenue and at the same time not exposing too much perhaps your equity. Here we have also Alan Lipsus who agreed to join us, and I would like to hear from him a little bit more on the early stage development of a company, because he works for the Slovenian Work and Skill Project, which is an early phase project, and he can probably give us more perspective of a newcomer's entry into as a company, and how his research background was instrumental in developing that business. Alan, please.
Yeah, thank you. Thank you all for giving me this opportunity. As was said, I'm part of this new, what you could say, startup, Work and Skill, basically a product that was funded by European Development Fund and will be launching now at the end of the year. And we are in the middle of, starting the startup throughout this product. The product is basically a freelancing portal that is blockchain based, with added value, of course, that beside the monetary value that a freelancer gets for his work or their work, they will also get competencies based written on the blockchain as an NFTs. So they will get, for example, this continuous career portfolio that they could then showcase to other interested third parties, and those other interested third parties could then immediately know that the presented skill set is verified, since it's immutably written on blockchain. But that's the product. Why we, for example, decided, so basically my story is that I'm part of this team now 8-9 months. Before that, I was in academia doing like academic research and philosophy. And what I find interesting is that it's quite different presenting to interested investors than it is to be presenting to interested scientific community. Because when you're dealing with investors, I didn't know that beforehand, but now I know. They immediately expect certain things to be, for example, answerable. And when you present to the scientific community, you just present the ideas and the arguments, and you can then debate about those ideation process and so forth. But in the area of private investments and this business development, you basically need other things than ideas. So this is quite revelatory for me. But at the same time, when you figure this out, it becomes easier because there's a template. You just need to answer this typical classical questions that any investor would like to be answered, like user acquisition, go-to-market strategy, and so forth. And this is where we are now. I'm basically trying to get our product to the market. So currently I'm doing, beside market research, I'm also doing and developing go-to-market strategy and finding other financial opportunities, especially in private investments. So that's with short summary of what I'm doing and what's my story.
Okay. What are your next steps? What are you looking for to develop next within your company?
Well, we are all the time. We are also identifying emerging use cases and maybe trying to see if we can, like people said before, with Harry, maybe identify opportunities for a spin-off, separate business unit that could be then presented to other parties. But currently we are developing, let's say, reach out approaches and how to get in contact with various investment opportunities. I mean, we already did like two to three presentations, or what do you call it, pitches to private investors, and we're still in talks with them regarding we want to flesh out certain details. But yeah, as far as production and development, we are currently in finishing stages of this product. But on the business development side, we are always looking for opportunities to identify different use cases.
It would be interesting to hear what the investors in this space have seen and observed while they've been active. I'd first like to ask Alain from Fabric Ventures, which was actually the first active company VC in the DeFi space, and that has received backing from the European Investment Fund as well. We have in the commission, as Valentina laid out in the beginning, set up a fund, one of the first pilot fund in this space in artificial intelligence and blockchain, together with the European Investment Fund, and Fabric Ventures was one of the first that co-signed investment with them. And it would be interesting to hear from Alain, who was also previously an entrepreneur, how he sees this space develop. And I think he has some interesting data points to share with us.
So Fabric is actually not specifically DeFi. It's a fund which is dedicated to backing the founders of what we call the open economy, as opposed to the centralized economic models that have underpinned the internet revolution since about 30 years. We have effectively a focus on decentralized data networks and all the applications that are built on these decentralized data networks to enable effectively a fairer distribution of incentives across the various participants to networks. So such DeFi that you mentioned rightly, Helen, is an application of these decentralized data networks, and an exciting one at that, in which we've made some interesting investments. But there's also the whole world of NFTs. There's the protocol world that Sarah Diane spoke about earlier, where we also made some investments as early as 2017. So we are effectively a fund which is a European-based fund. It's a Luxembourg-based fund. It's a 115 million euro fund dedicated to these technologies. So it's not a generalist fund with sometimes we make an investment in a blockchain or crypto related startup. No, we are totally dedicated to this new paradigm. We started to make investments in earnest in 2017. I will mention a few companies just to give a flavor of the types of investment we made. In the protocol world, we invested in Polkadot, in the Near protocol. We are on the DeFi world in 1inch, which is a decentralized exchange. We're in Messari, new forms of payment with Superfluid, the identity management and security with Orchid, and we also in some infrastructures that underpins the gaming and the non-fungible token new models that appear here. So we have Sky Mavis. We also are in this very prominent French company in the space called Sorare, with the digital collectible around football cards. So it's a mix of different investments. What's interesting is, of course, that there is obviously a much larger number of opportunities to invest in, meaning entrepreneurs building real stuff and useful things on these new protocols, on these decentralized data networks. And therefore, there's been obviously more investment interest in the space. So if I could share like a couple of stats. So Europe is for once, well, I shouldn't say for once. Europe is actually doing very well in this particular space. Now the US is still dominant in terms of the number of funds that are dedicated to the space. It's about 70% of all VC funds. But Europe represents about 24%, 25% of the actual volume of investment that is made in the space. And what's interesting is that you now see the emergence of these dedicated crypto funds, which wasn't, or blockchain funds, which wasn't the case in the last 5 years, where you had a lot of hedge funds. So I think people are quite rightly confused with the sort of this investment community in the space between hedge funds which are basically trading on these various tokens and protocols and creating more liquid yields, and then generalist funds sometimes dabbing into this new thing called blockchain open economy, and then you have industry funds like Coinbase or Consensus. What I wanted to perhaps share with you is a couple of slides on where the investors are coming from, because of course, what feeds a fund, it's investment. You mentioned the EIF, which is the anchor investor of the Fabric 2021 fund, which, as I said, is 115 million fund. But of course, EIF is not alone. There's been other investors, and perhaps it would be interesting to see what is the constellation. Who are these types of, what type of investors are they? So basically, we have here a couple of stats, which is coming from our fund, but it's an illustration of where this is going. You've got here the investor type, and I'm trying to put it on the big screen, if I may. Let's see if this works. Yeah. Investor type by ticket size in a fund like ours. So the majority of the funding as a single source of fund was the EIF. But the second sort of block of investor type was family offices and fund of funds. And then you see something quite interesting, is that founders of the new economy, but also founders of the I wouldn't like to call it the old economy, still the economy we're in, but the traditional economy are actually participating in the fund. So quite a large proportion of founders. And then what you can see here on the right-hand side is the same chart, but the breakdown is per number of investors. So you can see a bigger distribution here of high net worth individuals who are contributing to the funds. Investors by geography. So the vast majority of investors come from Europe, which is also very comforting. There is an increased realization in this space in Europe of the importance of these new protocols, these new decentralized networks, and the application that are built on it. And it's not something which is seen here in Europe as, okay, that's something, once again from the US, maybe we should look, see what happens in 5 years. There's very much a leadership, actually, a position of companies like the companies we've heard today, the startups that actually created out of Europe. And there's also a realization by the investment community that there's something really interesting here. So Asia and US obviously are the next two in terms of investors by geography. But in Europe specifically, where does this money come from? In a fund like Fabric Ventures, you can see that outside the EIF, which is, as I said, the anchor investor, we've got the UK and Germany pretty much on the par with Switzerland, which is also home to a lot of family offices. You see France, where we have a lot of founders from France actually investing directly in the fund, whereas in Switzerland it's more family office. And then we have obviously a distribution of countries, the red bit here, which is Slovenia, Slovakia, Poland, and so on and so forth. So a very large proportion of the EU countries outside Germany, France, UK. Luxembourg, being a Luxembourg fund, is also a large proportion of our portfolio. So I wanted to share these stats just to give you a flavor of how the investment community is seeing these opportunities.
That's very interesting figures indeed, and encouraging, as you say. I mean, if I understood correctly, you said about globally, an estimate is about 25% of funding would be coming from the EU, whereas the data points that you particularly digged into there was on your fund, Fabric Ventures, and there you can see at least a big majority, 70% almost, from EU-based funding, but with healthy also co-investment from other regions, which is a good balance, I would say.
Yeah, it's a nice distribution, you can say. And also what you find is that the deal flow, as we call it in the industry, is actually coming principally from Europe. There's an incredible number of very high-level talented individuals creating startup in this space here in Europe.
Now I would like to turn to Rick and get your perspective as well. How more broader, how deep tech space is developing. So your background is more, I understand, in artificial intelligence, and you worked with R&D in DeepMind, and you've been involved in blockchain since the very start, and I guess looking a lot on very early stage companies, and not only as we said in blockchain, but also in coming things like quantum and semiconductors, which is we have heard the scarcity these days. So what can you tell us, Rick, from your perspective?
Thank you so much for inviting me for this panel discussion. As Helen mentioned, so SpeedInvest, we are not only focusing on one narrow space of deep tech. We basically cover the whole, basically agnostic, different industries falls under deep tech, space. So we primarily invest in super early stage deep tech startups. And firstly, maybe let me give a definition of what is deep tech, because these days, if you're asking many different investors, they were all giving quite different definition of deep tech. I think probably three things are quite important from our definition of deep tech. Firstly is we're always looking for there's some scientific breakthrough in technology or innovation from the startup. When I say scientific breakthrough, I don't mean you need to build another Google or something that nobody else can do, but at least the approach, the way how you handle the technology can show there are lots of innovative, which is USP that can potentially build your barrier to compete in the industry. So that's probably our first criteria. Secondly, it's quite unique for us as a SpeedInvest. We basically looking for very strong barriers. So the way we assess it is, for example, if I took a team of engineers out of DeepMind or Google today, they cannot probably replicate your product within, say, for example, 6 to 12 months. So which means you definitely have some strong defensibility in the long term. And lastly is probably from founding team perspective, we're normally looking for there's a strong technical founder or some strong product person in the founding team to drive, the company in the early stage, particular before you have the product market fit stage. So that's basically our definition of DeepTech. Regarding DeepTech, we do basically pretty much, as I said, everything from traditional, enterprise software, for example, applied AI, that's a particular focus on one vertical, to really horizontal, cutting edge research-driven AI. Also, we're doing like hardware from quantum technologies to material science and semiconductors. Of course, we also look quite a lot, in blockchain and also related technologies. So I think one key thing we do have seen is, I would say in the past 2 to 3 years, deep tech is definitely becoming a hot topic, from the investment world. And particular, I would say in the AI, because with this acceleration in this industrialization and also commercialization, the development process of deep learning or AI has basically experienced a huge shift at the moment. So particular, actually, we feel there is a change from technology-driven approach, which we call AI plus, to a business-driven approach, which we call plus AI. So basically in the old days, when you have those technology-driven approach, which is the AI plus business model, so research scientists and engineers first develop new and innovative technology, and then they go out to find the product market fit. So that would normally take a longer time to find the relevant, applications in business. But in the last, I would say 2 or 3 years, because supported by this widening pool of AI talents and also tools available, so more and more traditional, industry are increasingly likely to consider the integration of these AI tools to be a viable way to improve, their operations. So this new phase of AI development flow, we call it plus AI. So, and also this new model where AI development is really driven by the search of innovative ways to extract the additional value from those existing operations. So that is mainly driven by, the business demand side of things. And one really obvious example you can see is, in the deep learning, there's a very famous model called transformer. So it took almost like 3 decades to move from a publication of the technology in paper to real application. But it actually only take 2 year, process for transformer. So OpenAI built this GPT-3, which is mainly based on this transformer architecture. So that's clearly example. And this is particular really, really, evident in the startup landscape. So early stage, for example, deep tech or AI startup, before with this AI plus model, normally focus on the AI technologies themselves, for example, like speech recognition, image processing. And on the other hand, this AI startup with this plus AI model these days, they are more focusing on providing solutions within verticals, such as retail, finance, manufacturing, transportation, and energy. And this applies very, very similar to the blockchain technology as well. So that's probably one of the really key things we have seen, particularly related to the AI, area. And for us, I think one unique thing we provide to the early stage deep tech startup is we provide lots of operational side of support. So instead of just providing some strategic advice, we normally hope, try to help basically the early stage founders to quickly find the relevant use case and also the product market fit, from our, experience. So that's probably a really quick, short intro of us and also a bit of explanation from what we have seen in the deep tech landscape.
Okay, now we have heard everyone's separate sort of perspective. Now I'd like to bring it a bit more into like an interactive discussion, if we can, and how you, in particular, think that the ecosystems are developing in your particular area of application. Do you see them growing? Do you see there's a healthy partnerships building within the sectors? And is there perhaps also more integration between different technologies? Is there already some sort of convergence going on between different technologies like AI, blockchain, Internet of Things? Or is it still very specialized? That would be interesting to hear from each one of you. I mean, anyone who feels ready can jump in.
We definitely see that in the blockchain area. And by the way, I still believe, for good or for bad, we're definitely still in blockchain plus and very little in plus blockchain. But the convergence that is definitely happening in the industrial sector is that IoT and decentralized or digital identities, depending on how you want to call them, together with blockchain create now possibilities that wherever you see blockchain being utilized in the non-DeFi, so not strictly for financial protocols and not strictly for media artsy NFT style applications. So the block that I would like to call industrial blockchain, in that area you will very, very often see that at least the ecosystem that I am immersed in, it is very closely to IoT, to intelligent devices, to communicating devices that will somehow be part of a machine-to-machine ecosystem, where in the future we hope to see micropayments, etc. And all of that, if you want to build it, blockchain is only a third maximum of the total solution. And for the total solution, you basically need identification and verification of your participants. And if you talk about the participants, I mean, company and customer is clear. We all know company and customer. But for the devices, so in Germany, we used to call this industry 4.0. In my opinion, we're now leapfrogging, jumping to something industry 5.0, if you do want to give it a number, where these different technologies come together, and all of a sudden these hopeful scenarios which we all had when we started talking about Industry 4.0, if you look at all the stories, why do we need 5G? Essentially, you need this fully immersive, full-blown connectivity for what? You need it for the many more billions of devices than you have humans on this planet that will then become part of a machine-to-machine economy in one form or the other. But all of this is, at the end of the day, business. These are industrial machines. So you do want to be able to attribute, okay, who contributed what? And of course, the moment you start attributing, the moment you have contributed, you obviously, okay, and now how do I get paid here? How do we settle this? And you will be dealing with micro, high frequency transactions all over the place. And this convergence, that is very much what I see happening as we speak. And here the tech, and that's the good news for Europe, the tech, especially in the German-speaking countries and surrounding, seems to be incredibly far ahead. So in terms of the companies that are doing that, there's a very strong, very powerful cluster in Germany and the surrounding countries.
Okay. Interesting vision there, and that corresponds a little bit what Alain said. I mean, they're also the fund that what you targeted. Any other comments on that, or do you agree, Sarah, Diane, or Alan? Do you agree that this is where the development is going?
Yes, I agree with Harry, and I think in terms of ecosystems, there is also the emergence. Harry mentioned it also, but new players or existing players that are working toward the development of this area. I would like to evoke and quote from Digital, which is the largest startup association in Europe, federating 1,800 startups and more than 100 investors, and which is participating alongside 3 startup organizations in DeepTech. We have also in France the creation of the ADAN, which is a crypto association, a non-profit organization. In terms of structure like business advisor, incubator, accelerators. There are also some players in France raising up. The only thing in this ecosystem that we think we have a limited support in is from the current government or institution, and we have notably identified some issues in France that after the PACT Act, which included giving an access for crypto businesses to bank accounts, that there was no enforcement of that, and we have still some big difficulties for crypto players and blockchain players to have a safe and easy in terms of operation ecosystem in terms of day-to-day running operation. So those are the missions we are tackling with those organizations like France Digital or the ADAN, to also push and make a safe space, and also which is totally complies with the regulation, of course, but ecosystem for startups. And this is going in the good way right now, but we still have some work to do.
If I may, Helen,
sure.
Often there is in this new emerging technologies, there is a need to actually encourage people who are very technically talented to explore business models that they may not have thought of. So one of the initiatives that I wanted to mention, because maybe it's relevant here, is something we launched with a French fund called First .vc, which is called the Crypto Fellowship. Le Crypto Fellowship, very much French way of doing things. But we selected 10 applicants out of hundreds of applicants from technology background who had the experience and the potential to create something, didn't have necessarily the ideas. We selected these 10 people or teams sometimes with €100,000 each to fund effectively a year of developing a new technology. It could be a new protocol, it could be a new application, and so on. And this has proven to be extremely successful. In fact, we would like to replicate this in other countries in Europe, because this is a way of encouraging people who may not think of this new sector into doing something interesting.
Okay. So interesting. So the ecosystems are developing and seems to be doing it by themselves, but they also need some support, if I understand. I mean, this sort of organization incubation and targeted support is also still required for people to get together and actually find the partnerships and the business model that they need, and the product market fit. So I understand we still need to support a little bit the ecosystem development, if I understand your points. Alan, did you want to come in here?
Yeah, I would just like to add that I also agree that there is great convergence in these technologies, since we with our product also identify that we need certain AI, I wouldn't say AI, but machine learning algorithms for matchmaking between different stakeholders. And also, if we are, for example, developing a product that will guarantee that persons who are working have transparent skill sets, we need them to somehow be aligned with the current live labor data. And that's why we also need AI to, for example, curate the different labor pathways that somebody with different skill set could take. So, for example, we're talking here about machine learning recommendation system. But just to have a little bit of a general light-sided remark, because we're talking about AI, I think that AI and blockchain are also very convergent, because I'm not a doomsdayer. I'm not a doomsday sayer, but AI might present an existential risk to humanity, and blockchain could, for example, mitigate it by securing it and developing the AI on blockchain could be like one way of securing our society.
How is the VC space? I mean, we saw the figures, we saw the type of investors and verticals and so on. We have in the commission previously estimated the sort of investment gap in Europe compared to other regions to about 4 to 5 billion a year. And then I don't talk about deep tech more broadly, more in the definition of risks. Do you see that how the investment volume is developing? Is that enough to bridge such a gap, or what else would be needed?
I have something to posit here, because if you measure the VC volume, then you're not measuring half of what's really happening. So I would posit, and I don't have the qualified research, so this is just by what I see. If you look at the biggest crypto-based propositions out there, take the Ocean Protocol, take the Energy Web Foundation, take Fetch AI, you will see that none of them have ever been touched by a VC, and they are not even going to the VCs, but rather they go fund themselves through what is very obvious for decentralized protocols. They go fund themselves on the token channel. And I would just like to throw that into the room, because I very much see that. I'm quite immersed now in the true blockchain, so in the protocol economy. And I would have to look hard to find somebody who's truly in the token economy, who's even considering VC funding, or if they are, they might consider it because they didn't manage to do token raise. But if they do have a choice, they will go token and they will go crypto. And many of them don't even bother creating a company. I'm not aware whether Ocean Protocol has a company. I actually doubt it. And so that is something to bear in mind when you look at the statistics, where you look at, okay, how big is VC into blockchain? You should also look on the other side of that fence, which includes data that doesn't seem to be on the radar, maybe as it should be, in my personal opinion.
Yeah, if I may, the ICO market and other types of token offering is very much there. What you find is what we observe is that a majority of companies are actually doing a dual strategy. So they're raising equity in the early days with VCs that can help them. And then they're creating a token which they launch on the market. And VCs participate usually in both. We participate in both. So we, in the companies that I mentioned earlier, we both were or are equity holders as well as token holders. And the reason why these companies, not just us, by the way, but A16Z, which is a very well-known US VC, which is participating to a whole bunch of these companies with us and others, they're very much in these organizations, even the ones that, to your point, actually, Harry, could do just an ICO or something else, like Sky Mavis, in the gaming world, or some of the protocols I mentioned, or Verisat and so on, actually doing this dual thing. And I think it's because what you find is it's a complex world, and there are a need for a collaborative approach. So it's not just, for example, token design, which is mentioned, which is not as obvious as it was, or it seemed to be in 2017 when you had this ICO craze. Designing a token so that there's true economic incentives is hard, and sometimes it's not warranted. So working on that, these are things where some of the VCs like Fabric Ventures get very involved in. Smart contract audits is another aspect of what needs to be done in the industry, which very few VCs get involved in, but they should. Liquidity, provision of liquidity, so that goes outside providing equity or buying tokens. Provision of liquidity to a new protocol or a new DeFi, new DEX and so on is very much needed. Again, this is where the value add of the specialized VCs in the space is actually valued by the investors, hence the equity component.
you think that we need much more specialization in the investment to understand, the opportunities and the combination of classical risk capital together with, like, for example, investing in assets, crypto assets? Do we need more specialization for that to be understood, or how would we otherwise go about, education or informing the larger investing community about these opportunities?
I think from my perspective, you have to think about this question from two perspectives. Firstly, from deal perspective. When I say deal, company perspective is, for example, if you want to do crypto investment, you definitely need people, for example, like Fabric Ventures, who really understand this space. They can be specialized. They can provide relevant help, to help the company to move into next stage, right? Because without relevant industrial knowledge, it's really hard to make investment in that particular area. That's from company deal perspective. But if you think from fund level, like us, SpeedInvest, we cover a whole different range of deep tech. The reason is because, firstly, definitely much bigger fund. But secondly is you have to think about the composition of the different risks as well. So what we do is we have roughly 80 people in the team. We basically put the team based on their expertise into different focusing areas. So for example, the team I'm leading and managing is the deep tech team. So we're primarily focusing on deep tech, investment. So that's why I would say, from company perspective, you definitely need specialized investor, but probably for us as a VC investor from the fund level, we still want to build a horizontal team, but focusing on different sectors. I think that will give the best return from the investment perspective.
This has been very, very informative for me, at least, and I hope that our audience as well have learned as much as I did by listening to your stories. Very much appreciate that you shared so openly what your experience and your knowledge in this field. I think we have reached somewhere from what I hear. We have reached somewhere in Europe when it comes to maturity of the deep tech ecosystem as large, and in particular then blockchain, which is still emerging. But we still have some ways to go. We still need to find more avenues of cooperation, more areas where we can go deeper into verticals like mobility and other sectors that still haven't applied, I think, or adopted blockchain very widely. We're still in infancy there compared to financial services. And we have we have the advantage of having specialized investors like Fabric Ventures and others also that really understands the companies here and can speak to them in a language that fits with what they try to achieve and the problems they try to solve. So I think that's very useful. And thank you so much. I would thank you very much for all your interventions and interesting discussion. I hope we will have an opportunity to touch base again and continue this.